It's a great opportunity to buy in. He'll tell us exactly where to do that. Also, Jared Levy, he's in the pits of the CME, and we start there in Chicago. So, Jared, do you smell fear in the markets, or is this just a pause?
Well, it's funny, right? 2-3 weeks ago, we were talking about how great things were, how euphoric they were. And now we're seeing sort of a shift as folks begin to ponder the conundrum. And the conundrum is, are earnings there in stocks? Not really. Do we buy treasuries? Probably not, because the Fed's going to be selling them soon. And then do we buy housing? Maybe not there, because rates are going to be higher. Okay. A lot of what we're seeing today is mostly technical.
Jared, why are the home builders getting ravaged over the past week? What is going on there? They've had a beautiful run. I know trees don't grow to the sky, but is there something a little more sinister going on?
You know, Liz, I think we need to take it on a case-by-case basis. I think for me to say all the home builders are bad or good is not the way to go. Companies like Ryland, I actually like. They're trading at low multiples. They're the best in breed. You know, they're gobbling up land. Their CEO had great things to say at their last meeting. You know, other companies like Toll Brothers that are on the high end of the scale, they're struggling a little bit more. And again, really, the point here is move into the space where you're going to have strength and you're going to have those low valuations. And remember, lumber prices are still cheap, and they're probably going to stay that way. That's also going to benefit those home builders, at least here in the next 6 months. Beyond that, when rates go up, that's going to be a whole other story.
Now, Tyler, you say there's still maybe more to this pullback, but you are still bullish, and you say this is a perfect opportunity to get in. Where specifically? What sector screams out as a buy right now?
Well, I think at this point, big cap tech is definitely there. I think there's some great opportunity in big cap tech, especially as well in the oil services area, energy. We're seeing oil and gas pipeline companies. I think there's some great opportunity there. And longer term financials with an improving economy, steepening yield curve, M&A activity, lending activity picking up. This is a great thing for financials going forward.
Okay. Let's get to some other names that you really like, Tyler, because we want you to show us the money, but specifically, what in technology do you like right now?
I tell you, Cisco has a lot of things going for it. And if you were on the last earnings call, you were seeing a CEO that was like a kid in a candy store. We haven't seen Chambers this excited for 7 to 8 years. There's been some studies that are saying that over the next 5 years, we're going to see internet traffic increase by 3-fold. And that's because we want to see the streaming video. We want to see it in HD. And Cisco is positioned to be the #1 company providing internet infrastructure. And we're going to be seeing dividends move up. We're going to be seeing stock price move up. They have a lot of things going on, and they're taking advantage of M&A activity at this point, too.
All right. So I like what you're doing, Tyler. You look at the big picture. Bandwidth, we're going to need it. Cisco's the perfect thing. With regard to natural gas, that's another game changer. Obviously, the way that we've been getting it, the amount that the world has access to that it never dreamed of just 5 years ago. The best play for natural gas, you say, is Kinder Morgan. Why?
Well, for us, it's really the energy play in general. I mean, here over the last 5 years, we have all this controversial horizontal drilling and fracking. And as you said, we're able to pull natural gas and oil out of the ground at rates that we never thought we'd be able to do. So Kinder Morgan, a great way to think about it is the energy toll roads for energy infrastructure. So we don't necessarily care which way the commodity price is going. As long as there's gas and oil floating through these pipes, we're going to be getting paid a lot of money for that. Again, they're firing in all cylinders. They're growing the dividend at 5 to 10% per year. We're sitting at a 4% dividend now. They're having some great acquisitions, able to take advantage of what's going on in the capital markets by buying cheap and growing both organically and through outright purchases. So again, great place to be, great income play, and I think something we're going to be really happy about over the next 5 years.
Jared, you can hear Tyler's excited about options and opportunities. You've got John Chambers over at Cisco excited. He was here on that exact day that he was revealing all of those numbers and how excited he was. Is this going to be a quiet summer, Jared?
You know, well, quiet, probably not. I would say that, and what we're seeing in the options markets is that the professionals are betting on anything but quiet. And in fact, if we look at the put options specifically, they've really started to get more expensive than the calls. And remember, markets have been coming down quite a bit here in the past couple weeks. In that time, puts have gotten more expensive. And all that means is probably a little bit more downside. You know, I love his picks. I like Akamai, too, in the tech sector, by the way. I like the energy play, and I do like natural gas, and I still like CHK, but quiet, probably not this summer if I were to place a bet either way.
By the way, Jared, even though you see see a home builder problem, a pullback of sorts continuing. There is a play there on the weakness, and that's Ryland. Why do you like it?
Yeah, I love Ryland. Okay, a couple things. First of all, if you listen to their call, here's a company firing on all cylinders. They're gobbling up dirt, as they say it, at record low prices, and their sale backlog is up 57%, from last quarter. Or I'm sorry, from last year. That's insane. Yeah. And when you look at their valuation, they are the lowest in the space. And for me, that makes sense. And remember, David, there's not a lot of cheap homes out there. The folks that need 2- and 3-bedroom homes at $150,000, $200,000.
The
there's not
home
a lot of
builders are
inventory.
back. We have half the number of home contractors that we did 7 years ago. Half the number.
Yeah.
Even if they wanted to build full out, which they are, there still aren't enough houses being built. Guys, thank you very much. Tyler, Vernon, we appreciate. Jared, we're going to see you in a couple of minutes when the S&P futures close there.
Thanks, Dave.
Thanks, gentlemen. With 10-year yields hovering near 14-month highs, what's going on there? See, you start to worry, right? Big bond investors like PIMCO started to reduce